Hi, welcome to the Market Alert for Wednesday, the 7th of February 2024. So bank blow-ups are back on the radar. These spark a bid for bonds, bullion and Bitcoin, but that's not lasted on the overnight market. There will be certainly some banks that have to be closed or merged out of existence because of this. So again, the smaller banks, regional banks in the US are starting to see an issue again with liquidity and obviously no doubt being bailed out by the Federal Reserve. US stocks eked slight gains in choppy trade amid lower yields and banking sector concerns. We're back to where we were last year with Silicon Valley Bank, and banking sector concerns were stoked by further plunge in New York CB shares, which dropped to 22%. It's all going on behind the scenes. It's all smoke and mirrors, as we've seen for the last few years. Economic news today to move the markets. FOMC Kugler speaks, and Barkin is also out. These are minor celebrity members of the Federal Reserve. And then we've got a 10-year bond auction as well. Let's have a look at the markets for yesterday. As I said, it eked out smaller gains, but let's kick off and have a look at the Dow Jones. So in the Dow, the market sideways to high yesterday, coming off the lows of Monday, never going down to these yesterday. Overnight, the market struggling a bit to get back above the high of yesterday and also the 5-bar moving average. Upside, we've still got the all-time high of 38,782. 40,000 is the upside target. All it needs is one catalyst of economic data just to move the markets to the upside, and then it will do what it needs to do. 30-minute chart for yesterday, we moved to the downside to start with. We became oversold. The market then reversed and headed up, as you can see, particularly at 230. But what a choppy session it was for the remainder. A bit of a rally into the close. Overnight, the markets spiked above the high of yesterday and now drifting slightly lower. It needs to stay above the close. The DP for sure, and the 200 MA, 50 EMA, and the 20-bar moving average in the 30-minute chart there. In the German DAX, we've had a new all-time high on the overnight, 17,064. It's come off this, though, and is moving lower as I record. Let's just have a look at the 30-minute chart to start with for yesterday. Market moved down, became oversold, and then after trading sideways for a while, broke out to the upside and moved up all the way through lunchtime. But the morning session, again, sideways. New all-time high overnight, as can be seen here. We've got this 17,064. Market needs to get back above this high in order to take out the 17,064. Also stay above the 20-bar moving average as well. At the moment, prices are finding support at yesterday's close. Just have a look at a smaller time frame, see what's going on as we've made a new all-time high. Let's just have a look. So yeah, we had a bit of a spurt to the upside there. There's the 17,064, which you can see, and there's the high of yesterday. Market closing back below this, so it's going to form a bit of resistance. However, you can see it bouncing. This is the third time the market's bounced off the close of yesterday following the new all-time high, but also previously the close lent some support here, so keep an eye on this area because it's obviously is an important one. In the S&P 500, no all-time highs yet this week. Friday's high still stands at 4975.2, up on the overnight but hasn't taken this out. 30-minute chart shows the market moving lower on the electronic market yesterday, and again you've got this triple bottom at the close for Monday. The market then moving up, trading to the R1 overnight through yesterday's high, which again we saw with the German DAX, and then the market coming back and sitting on the close of yesterday at the moment. Meanwhile, in the FT100 also moving higher overnight, so I don't know what's happened that's allowed the markets to do this. But we took out the resistance to the left, but struggling with this at the moment. So in the 30-minute chart, you can see yesterday we spiked, we came back and found support at the averages there, just below the 200 MA, but we soon brought the market back, and it's been up ever since. And we've got that overnight high that's been created, breaching yesterday's high. So let's just have a quick look at what this price is. 7708, but the market's struggling at the moment. It needs to close back above the high where it had previously found a bit of support, but like I say, you can see there it's struggling at the moment. Over to the US dollar, this down a bit yesterday, but that's made no difference to the price of silver and gold. There's a bit of a disconnect, the market moving lower overnight as well, which we'll look at in just a moment. The gold-silver ratio as well we'll look at after we've looked at the metals, but certainly the dollar showing still strength there because of the hawkishness by Powell, which means that we're going to see interest rates remain somewhat at these lofty levels for the time being, which is only going to make it more difficult for the banking sector, which I've spoken of before, with the cheap bonds that they had and the interest payments on those yields as well on the new ones. So let's have a look at the metals. So there you can see a quiet day for the silver market yesterday, down at 78% retracement from this peak to here. We're going through 21.86 down towards $20. You can see this purely on the overnight. The market's already traded down to yesterday's low. There's a bit of buying there at the moment and it is oversold. May get a bit of a bounce, but when it comes to the lunchtime LBMA fix, don't be surprised to see the market move prices lower. They did this yesterday morning, got a bit of a bounce there on some economic news. Market traded sideways overnight, managing just to get above the close. But look what happened already. They've started selling the futures contracts in this market as the dollar is also starting to move to the upside. Meanwhile, in gold, a lot of support, nowhere near the previous day's low, which was Monday's. The market's sitting at that 89% and holding. And the 30-minute chart, you can see that a different picture completely as opposed to gold, which means that the gold-silver ratio has moved back to the upside, as I predicted. And let's have a quick look at this. So gold-silver ratio, as I mentioned the other week, we go to 92. We did. We've had a bit of a pullback and we're now making our way back. This is an 89% retracement so far. Let me see if I can find a tool here to actually do this. Yeah, there you go. You can see we're heading back up to those sorts of levels. I'm not familiar with the layout of trading view, but let me just see if I can get some settings on here to put in 89. It's in a foreign language, doesn't help, does it? Anyway, you can see that it's towards 80, 89. I think this is in Turkish by the looks of things. Let me just bring this back. Yeah, I don't know why. No idea why it is, but anyway, it doesn't really matter. You can see there that from this high to there, we're heading back to the 92, and don't be surprised if it's taken out. Okay, let's have a quick look at the markets for yesterday on an intraday basis for the German DAX, and a quick look at the overnight in a bit more detail as well. So yesterday the market being pumped back to the upside. They're going to keep moving these markets up as long as they can and hold it, but depending on the March outcome of the FOMC, whether rates will be reduced or not, I very much doubt at the moment given the hot data that's being released. Then we'll see prices try and hold on the highs. Market opening yesterday, moving down, went to the 200 MA, managed to drive through it, and then just trailed the stop down, and then coming out of the trade as it came back above the 5 MA, which is a bit of a shame because the market then continued down to the close and below the close to the BRN before finding some support, and then this support failing, and then continuing lower as well. So we could have had a bit more out of this trade, but it's always difficult in the heat of the moment. Mid-morning, the market then moves sideways and then breaks out to the upside as the Dow overnight market comes on stream, and then prices remaining sideways to higher there. In the afternoon, the market started to move higher. We went through the high. The high then became support as we had a failed signal to the downside. As you can see there, the market then coming back. You can see the buying coming in there as well. You've got that green inside of the red bar, which is indicative of buying coming in. Important area, the high. They always want the market above the previous day's high in the stock market if they can. And you see that happening. We get a retest back down. And at this point, we get a potential sell as well, which failed, taking some of the profit off the morning's winning trade. and then the market just trading sideways to higher there, as the Dow S&P traded in a range for the remainder of the session, apart from 30 minutes before their official close at 9 p.m. Okay, let's have a quick look before we finish at the overnights, and here we can see that we've moved down to the close once more. There's a bit more detail there. You can see the green inside of there. There's buying back above the 200 MA in the 2 minute, and we're heading back to the high already. So just a shakeout to wrong foot traders think that the market's going to be moving lower, and then they just take the stops out as they bring the market back to the upside. As I've said before, at the moment there's a lot more activity in the overnight market and pre-market sessions than there are in the day sessions. So when the market opens at 8 a.m. at the moment, prices are sideways, as we've seen for the last 3 weeks. Okay, that's it for this one. Let's see what happens today. Not much news. Two Z-list celebrities from the Fed coming out, but other than that, we'll just have to wait and see. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.